Welcome back. The members of the CNBC-TV18 Citizens Monetary Policy Committee have been debating the issues that will come in front of the Reserve Bank and the MPC. I've been speaking with Chairman Pronab Sen, Samiran Chakraborty, Soumya Kanti Gosh, Sonal Verma and Sajjid Chinoy, who are members of our MPC. Gentlemen, and Sonal, thank you very much for waiting on. Sajjid, let me prod the core inflation question a little more. Sonal was pointing out that we are seeing a fall in headline and food inflation, and core services are falling. But the Reserve Bank seemed very concerned about core inflation. It crept into their statement last time. What are your worries? Do you think we'll persist with 6% levels?
I think the Reserve Bank is rightfully concerned because of the length of time that core has been sticky. It's been sticky now for 3 years across the business cycle, creating concerns whether, hardening inflation expectations or the changing industrial structure during the pandemic have pushed the Phillips curve up. Do we risk living with higher core inflation for any given level of slack? So I think that's something that they'll have to monitor very closely. I agree with Sonal to the extent that if you looked at the November core number and you went deep into the details, core is becoming slightly less broad, but it's only 1 month's data. But there are two risks to monitor on the services front. One is housing is a huge part of core services, and we haven't seen the housing index pick up at all. This typically happens with a lag, with the real estate market picking up, and be very watchful about how much housing translates into core in months to come. The second risk is even as the global economy is slowing and urban wages will soften. Look at what's happened to rural wages the last few months. Until November, year-on-year rural wages had risen to 6.5%, but the momentum 3 month on 3 month was above 8%, almost 9%. So even as urban wages may come off, rural wages are going up, which is a good thing for the rural economy, but something that the RBI will have to be very mindful of when thinking about core services going forward. Why does all this matter when the target is headline and all of us believe headline is going to be below 6% for the coming months? Because if you look at a lot of data, what you'll find is when headline and core diverge, if core gets stuck above 6% where it is, and headline goes down to below 6% to 5%, when headline and core diverge, we've repeatedly found it's headline that converges to core 12 months from now and not the other way around. So until the RBI has conviction that core is softening, they'll need to be very cautious because today's core inflation is your best predictor of where headline will be 12 months from now.
Okay, but 12 months from now, we are being told that it's going to be closer to 4.5%. So anyway, we'll have to wait to see what the Reserve Bank thinks about that. Now we have to come to the stance. Samiran, I'm a little confused over here because the stance is withdrawal of liquidity. There is still some liquidity, surplus liquidity in the system. As well, as Soumya was pointing out, the borrowing program is big. So there are hopes in the market that the Reserve Bank will have to do an OMO. What stance should they take?
So, Lata, the stance is withdrawal of accommodation, not withdrawal of liquidity.
Sorry, withdrawal of accommodation.
So, and there's a difference. The difference is that the withdrawal of accommodation has a rate component and a liquidity component. So, from a rate perspective, I think RBI is going to stick with an inflation view of a 9-12 month ahead number, which is maybe 5 or below. And that if they hike by 25 basis point in this policy, that would mean a 150 basis point plus of real policy rate, yes, which can be thought of as neutral rate according to us. But the challenge is that on the other aspect of withdrawal of accommodation, which is the liquidity, the durable liquidity surplus is still 2.5 lakh crores, which they might want this number to come down before they can call it neutral. So this is the kind of dichotomy or debate that RBI is going to have about whether to change to neutral or not. But since all of us in a almost unanimous way discussing about a softer growth outlook and a relatively lower inflation outlook, and I'm not getting into the nuances of it, there is a possibility that RBI will be a little biased towards calling it neutral despite the liquidity surplus being still quite elevated.
Okay. Well, I'm glad you corrected that it is withdrawal of accommodation. And on the same point, Sonal, you're of the view that you are clearly seeing signs of disinflation, even in core. Chances are, even if there is a hike, this is the last hike, from what people are telling me. So why not go neutral? Do you think a stance change is called for?
Well, what they do, Lata, is a separate thing. But in terms of what they should do, I do think the stance needs to change, irrespective of how the MPC has guided the stance with respect to liquidity or rates. It's time to move to neutral. Now, the argument against that is if you hike and change the stance, then it basically undoes the impact. But look at what happened with the FOMC this week. I mean, the guidance was still on ongoing increases, yet markets did rally. So I don't think that's actually a very potent argument. Ultimately, it's also credibility of the MPC itself in terms of what they are guiding. After doing 300 basis point in effective rate hikes from the reverse repo to the repo corridor, after seeing the transmission on deposit and lending rates already, there is, all reason for the stance to move to a data dependence. And now, data dependence doesn't mean necessarily that the next move is going to be a cut after a pause. It is possible if the macro dynamics change. It could also be a hike or a cut. But I think it's time to now take a pause and assess the impact of the tightening that has been done so far. So my view is the stance should definitely change.
Okay. Well, since you spoke about the changing situation, we are also now in a situation where asset prices have fallen, at least stock market asset prices have fallen. The governor has been talking about financial stability. Do you think now, for financial stability reasons, neutral stance is called for or a pause?
Yeah, I think, Lata, that's an important point because the wheel has actually turned full cycle from a situation after the pandemic when the primary concern was financial stability, and that was addressed through a lower interest rate regime and liquidity measures. Then the focus turned to inflation because inflation we had to control. Now that we are getting a grip on the control, maybe that wheel has again turned from inflation stability to financial stability to inflation to financial stability. Given this fact, and I think globally, if you see, whenever the central banks are actually slowing down the rate hikes or cutting rates or pausing rates, I think they are in a different league because in unison they raise rates, but when they withdraw, that's a difference. So that actually important implications for financial stability also. So that could be one of the factor which is also which could be at the back of RBI mind.
Yes.
And finally, very quickly, I think in terms of the stance, if you ask me, I think what Samiran said in terms of the liquidity, we are almost at that level where the RBI wants non-inflationary 2.5 trillion. But if they stand to neutral now, I think that will mean that giving chance of a rate adjustment. I think the time has not yet come to give that to the market that we are not bothered about inflation. So let's be bothered about inflation, but let's be country specific and domestic specific conditions.
I wish we can be country specific. It's an extremely confusing backdrop. And Dr. Sen, I want you to put all these things together. Global central banks, a couple of them are still in tightening mode, big ones. And domestically, inflation has fallen, but we are very far from 4%. We have come to below 6%. Growth, as you explained, still under a lot of pressure. What's your overall view that the MPC should take?
Lata, the thing is that as far as the MPC is concerned, at the moment, they are in a situation where the conditions of the economy are such that what you're seeing is almost a decided slowdown in terms of growth and a mild trend towards slowdown of inflation, but that's still iffy. Now, given that kind of a reality, the question that is going to plague the RBI, I'm not sure how much the MPC will take it into account, will be that they may come under pressure for not supporting a revival in growth. And that may happen pretty quickly. This is the worry. It is unquestionable that even with the global central banks easing up on their monetary tightening, the global economy is going to slow, less so than we had feared earlier. But nevertheless, this is going to impact us. And I don't think the RBI can be in a position where they're unable to respond because they've committed themselves too quickly.
Okay, they are in a very sticky position, as you say, sir. Probably growth is going to slow down, but inflation is way away from the 4% mark. And perhaps this specific MPC will bear the dubious distinction of having inflation at the targeted 4% for the least number of months. So that, I don't know whether that will play on their minds, because a couple of the members do seem committed more to growth. But let's see how they'll vote. We first want to know how our MPC members will vote. The first question to all of you: will the MPC hike rates on Feb 8th? And if yes, by how much? May I start with you, Samiran?
So we are calling for a 25 basis point hike in the February policy, but this should be the last hike for the moment.
Soumya?
We are calling for a pause in the February policy.
Okay, so already divided house. Sajjid?
One final 25 basis point hike in February.
Okay. Sonal?
Final 25 hike.
Okay. Sir, Mr. Chairman, the hikes are winning. Where do you vote?
Pause.
Pause. Okay, so it's an actually equally divided house. Let's see what they do on stance. What would the stance be?
I think changing to neutral will give them the required flexibility at this
From
moment.
withdrawal accommodation, it changes to neutral. Soumya?
Not yet time to change the stance.
Okay, so persist, no change in stance. Sajid?
Persist with the stance, or you lose your transmission from previous hikes.
Okay, so persist with withdrawal of accommodation. Sonal?
Lata, I really don't know. I think the stance needs to change to neutral, but if you're asking me to vote on what they will do, I think they'll retain the existing stance.
That's a perfectly divided vote, actually. Dr. Sen?
Well, I would go with exactly what Sonal said. But at the end of the day, I have a feeling they should change to neutral.
Okay.
And they may change to neutral.
So, Dr. Sen, you're going with neutral, right? Okay, in that case, we have a perfectly divided house. We have three people who are opting for staying on, staying on with withdrawal of accommodation, and two persons, Samiran and Dr. Sen, voting for a change to neutral. It's going to be a very interesting RBI deliberations at the Monetary Policy Committee. That will be coming up for you on Feb 8th. Thank you very much for watching the Citizens MPC deliberations.